Hi, I'm Akshat Malhotra. This is not just a standalone video, but a part of an entire course on the fundamentals of personal finance. All the videos so far covered everything you needed to know to set your basics and even understand the various financial avenues that are available to invest. Now, this particular module will cover diversification and financial planning in depth. Welcome back. So now that we've learned about various asset classes that are available to us to invest our money, and we've also learned about the financial avenues available in each of these asset classes, how do we go about choosing which one is the right one for us? So to do that, let's do some historical analysis and do a comparison on what was the return of each of these investment avenues. Let's say if you had invested some money in 1980. So we've taken out some data here, and let's say you invested 1 lakh rupees in the year 1980. Okay, you had 1 lakh rupees in the year 1980. Now, first and foremost, if you calculate inflation, so 1 lakh rupees of year 1980 is going to be roughly about 10 lakh 30,000 in the year 2020. 6% inflation adjusted just by the basic mathematical calculation, 1 lakh is 10 lakh 28,000 rupees. So which means if you, let's say you bought this pen for 1 lakh rupees in the year 1980, the value of this pen is going to be about 10 lakh 30,000 rupees. You have to pay 10 lakh 30,000 rupees today in order to buy the same pen. Okay, I hope the pen is not that expensive. Anyways, now let's say you invested this 1 lakh rupees into gold. What would be the value of that 1 lakh rupees today? Roughly about 25 lakh rupees. Let's say you'd put that into a fixed deposit. What would be the value? Roughly about 22 lakh rupees. In PPF, about 38 lakh rupees. And in Sensex, which is one of the indices of the stock market, this 1 lakh rupees would have been 3 crore rupees, much more than 3 crore rupees. Now, yes, Sensex looks the most attractive, looks very luring. But remember, although it shows 3 crore rupees in total jump, there were times in between when the stock markets crashed as well. And so, having said that, let me first ask you this question. If you had 1 lakh rupees today, in which of these instruments would you want to invest all of your money? Take a moment, take a pause, and tell me which instrument would you invest your money of 1 lakh rupees in? Okay? So based on the answers that I've seen from a majority of you, everyone has said Sensex, everyone has said stock markets. Few of you also chose PPF. But yep, Sensex stock markets is common across all answers. And then a lot of you said, forget about PPF, forget about FD, forget about gold. Sab kuch, everything goes into the Sensex, everything goes into the stock market. I'm just going to buy companies and that's it. But before we do that and before we actually talk about it, I wanted to share a real example. So today in the morning, you had to go to the nearby supermart to buy some eggs. You bought 12 eggs from the shopkeeper and you asked him to put it into a poly bag. While coming back home, while returning home, something happened and all of a sudden that packet of eggs slipped your hand and all 12 eggs broke. And you were like, shit, I'm going to get scolding from home. What do I do now? Now think of it the other way. Let's say you were there in the shop and at that time you said, instead of putting all these eggs into one packet, can you please put it into 2 different packets? Had you asked the shopkeeper. Coming back home, let's say if you had dropped one of them, you still would have the other one, right? A very common example, I'm sure you would have heard of this. But this tells us that if something goes wrong with one thing in life, we still have half of the other thing. And using the same example, the same analogy, coming to our money and investing our money into various instruments, let's say if we invest our money into 4 different instruments and maybe 2 of them did not perform well, 2 of them did perform well, it helps us average out our risks. Rather, if we had put all of our money into stock markets or into one of those instruments and by chance something happened to that, let's say we put all of our money into one bank's fixed deposit and something happened and that bank had to shut its operation, all gone, all gone. And so from this, we learn this very, very, very important concept of diversification. It's very important for us to diversify our money into various financial avenues so that we can take the flavors of all, we can enjoy the merits of all, and at the same time, we can be prepared for if in case we have loss in any one of them, so that the other one at least averages it out, right? I'll also take you through one more real world example of diversification, but not related to money. And I recently learned about this very interesting thing that happens in big corporates. So, let's say ABC company, a big corporate, 2 of their top management, 2 of their executives have to attend a conference in, for example, Mumbai. They live in Delhi. They need to attend the same conference in the exact same time and the exact same venue. So for the company, when they're booking their flights, when they're booking their tickets, they'll book them in 2 different flights, not the same flight. The reason being that let's say if something happens to one of the flights, it's either delayed or some crash happens, God forbid nothing of that sort should happen, but any sort of mishappening happens, then these 2 people are the top management. They know everything about the company. They know about the secrets. They know about the finances. They know about the business plans. So let's say if both of them were in the same flight and something happened to that flight, all of a sudden that's going to be a huge setback because a lot of things might just go away with them. And so the company deliberately books them into 2 separate flights that by chance, even if something happens to one of them, the other one is safe. There will be a setback to the company, but the other one can still handle it. The other top executive can still handle it and take care of its operations. Did you know about this? What an amazing real life example to diversify the risks associated with a particular scenario. And so when top management, top companies can think about diversifying their risks, shouldn't we as individuals also do that? So please do not put all of your money into any one scheme. Don't get lured by the ads out there which promise abnormally high returns. Always think about diversifying your money in the right way. How do we go about diversifying our money? In the next chapter. If you have any questions, please add them in the comments below and I will make sure we answer them. Do like, share and subscribe to this channel.